was already mentioned by our president a while ago, we'll be doing something different today. So just to add a little more color on that, we'll be dedicating one whole segment, right, for our experts' topics for today. So that will be in the second segment. And in the third segment, another deep dive into your most requested stocks. So you can request along if you want. All right. But of course, before that, so that's segments 2 and 3. But before those, we'll be setting the table first in segment 1. We'll be looking at the big picture to basically build upon our discussion for the rest of the day. All right. So with that, let me start with April. Okay, so I remember last January you mentioned that you expressed some optimism. Actually, it was the first time in quite some time, right, that you turned optimistic. But of course, since then, the market has still stayed largely sideways. So could you update us on what has happened since the start of the year?
Okay, thank you, Charles, for highlighting my optimism. Anyway, let's go to slide 9. So, we can do this quickly lang, no? Yes, true, there were a lot of positives, but I'm still, I'm not pessimistic. I have to highlight, but I guess, kasi diba, the market is down 2.5%. For those who have, I guess, occasionally been monitoring only the market, parang okay, it doesn't seem like it. On the positive side, a lot of the things that we were expecting materialized. So we had falling inflation, which in turn allowed consumer spending to recover together with election spending. Then, of course, the BSP cut rates as expected. They cut a total of 50 basis points, and it looks like they will be cutting again later this year as inflation, as announced yesterday, for the month of June was lower than expected at 1.4% and still well within or actually even below the 2 to 4% target range of the BSP, thanks to lower oil and rice prices. And another pleasant surprise, I think, is the stronger peso, which a lot of Filipinos, even investors, were not anticipating. And finally, the passage of SEMEPA, which led to lower stock transaction tax, which I'm sure you're all benefiting from, effective July 1. But that said, we do have some negatives. Remember, one of the reasons why I was quite positive is the FDIs that we expected to materialize. They did not happen. And then we said that the Philippines is going to be relatively resilient from the, what's happening globally. But seems like we're not. And then next is the unimpressive earnings growth and the numerous threats facing the different sectors. So can we go to them one by one? Okay. So FDIs, remember I talked about this, the Create More Law, and they were saying that they were anticipating 4 trillion pesos worth of investments, which kind of surprised me because 4 trillion is a lot of money. But during the first quarter, this is a number that I was closely monitoring, and instead of seeing that 4 trillion come in, we actually saw FDIs going down by 41.1%, which is definitely disappointing because this could have created more jobs, which in turn would have boosted consumer spending. Okay, then let's go to the next slide, which is on the economic growth outlook. So I guess if you recall what happened in the first half, I think one of the most important developments is the election of Trump and, of course, his trade policies. So remember, on Liberation Day, he came out with his reciprocal tariffs and the markets fell because, of course, that would negatively affect economic growth. And people were so bearish, but surprisingly, as of today, parang nawala na lahat, diba? Just because instead of the huge tariffs, he said, okay, let's just do 10%. And then, diba, he kept on changing his policies. But that said, objectively speaking, let's go to the real world, not, not Wall Street, not the market, not the financial world, which says everything's all right. If you own the business and you have this uncertainty. You don't know whether, di ba, the 90-day pause is coming next week. So we don't know what's going to happen, if we're going to have the reciprocal tariff or not. Okay? So what would happen is you don't know what to do, and you will be a little bit gun shy when it comes to expanding your business and hiring more people, even if you are in the Philippines, because I think what we can see is so far, even though we are relatively isolated, meron pa rin siyang impact. So let's go to the next slide. We looked at this survey that came out of the BSP, checking the business sentiment index. And one of the questions they ask is, what are your plans in terms of expanding next quarter? What are your plans in terms of hiring people? And you can see that, because of the uncertainty, their plans have been put on hold. So kahit paano, meron pa rin. 'Di ba? Kasi parang, yun sagot nila, so why are you not expanding as much as you can? Or why have you turned more, I guess, bearish, more conservative? And they highlighted the potential. They don't know, but they said potentially there could be a negative impact of higher US tariff rates. So no expansion muna. Status quo tayo, tapos medyo let's see how things turn out, and we expand as needed. And let's go to the next slide. Then yun na nga, I think si boss highlighted, naiwanan na naman tayo. Oo, totoo, kasi unfortunately nga, with this type of earnings growth, earnings grew, but it's not exciting. Hindi ka mapapabili kasi parang ayan na yung recovery. See, it's just a 6.4% growth, which is single digit. Not exciting. So it doesn't excite investors to come back in. Okay, that's why. And if you look at the various sectors, what stood out or was kind of surprising for me is that the telco is actually down 5.8%. And power, which is supposed to be resilient, down 28.3%. So kind of surprising, right? So I think that's the reason why, or that's one of the reasons why the market didn't go up as much as we would have wanted it to be. And finally, let's go to the last one. There are numerous sectors that are facing threats. For the property sector, sa totoo lang yung property, nag-grow yung earnings. Pero it's one of the worst performing sectors because there's an oversupply in offices and oversupply in residential. And if you look at the disclosures of the companies, they talk about the take-up sales still being negative. And in fact, some only started second half of last year, registering negative take-up sales. Kasi parang aware na yung mga tao na mahina pala yung market, so hindi na sila nagmamadali. And then the telco sector, one of the things we kind of noticed is that dito seems to be having some competitive impact finally because the market share has increased already to around 6% of revenues. And in a market where revenues are just growing by 3%, a 6% revenue share already has an impact. And then recently we have the Konektadong Pinoy Bill, which will mean open access and potentially more competition coming in. And lastly, you have the gaming bill that may materialize, and it would regulate the use of e-wallets for top-ups, which both Globe and PLDT have exposure to. And finally, the gaming sector, which I'm sure is the most controversial right now. First of all, we've warned investors about this. There's increasing competition because it's just too attractive. Okay, I think DigiPlus, after doubling earnings in the full year last year, almost doubled first quarter earnings as well. No, parang unstoppable, But anyway, so because of that, they are attracting more competition. We have as of December 60 license holders na yata. And then the BSP already said that it wants to prohibit banks and EMIs from presenting offerings associated with gambling activities. And then the proposed gaming bill, prohibits the linking of e-wallets, but of course we don't know what that means. Increasing the top-up requirements to 5,000 peso. Okay, 5,000 pesos is a lot of money. So I think the average revenue per user or yung size nung gumagamit ng e-gaming is only 1,000 pesos. So 5,000 is a lot of money. And it will, of course, negatively affect the business. Then regulate advertising. So yun na nga, anecdotally, if you go through EDSA, I'm sure you'll notice that most of the ads you see are now gaming ads. And even if you go to, di ba, parang mga websites and stuff, there's like a lot of gaming ads. Yeah, and stricter implementation of KYC requirements, so, and even increasing the age to 21. So that would make it a lot more difficult. So in that respect, parang marami pa ring mga obstacles facing the market.
All right, first question pa lang, ang dami ng takeaways, no? But I'm sure we're gonna get back to that, especially when we dig deeper into the stock-specific issues. But for now, I wanna shift first to the technical side. So, Juanis, 6 months ago, you mentioned some like potential technical headwinds, right, in the market that it was facing. Are we still in the same boat, and what are you seeing now, in like technically?
Okay, so not sure if you have the slides up already, but the index managed to be able to calm itself since the beginning of the year. It was locked in a big range. I'll show you that later. But we've had the market try to make a bottom recently, and we seem to be in a rally phase right now. But in answer to your question, I didn't see much change, although there were some changes that created the volatility inside the big band of that particular index. So our index right now just recently bounced through 6,200. It was a scary low because it was at that time when the war in Israel and Iran took place, and the index just actually broke a small consolidation, which at that time, admittedly, I did feel some pressure at that time because of the break. I didn't want that to come closer to the low. But fortunately, 6,200 did hold, and we saw the market make a recovery since. So I will just continue to be able to press on the range trade offer that we still to have. But normally, inside a very big sideways market, you're going to get very mixed movements. And the reason our index is not climbing as against some other Asian countries which are doing exorbitantly well is really because we have a very mixed situation. If I could just call the next slide, please. You would notice here, these are like 6 issues that we have inside our index. And you have Globe there, you have JG Summit, ASAN, PLDT, SM Prime, and Jollibee. And you can see that many of them have come all the way back down, especially Globe. And this dispersion on the market is a problem because what people are doing is they're not holding their stock. What they're doing is they're buying it, selling it, moving to another issue, and rotating the money rather than putting more money into issues that are making more money for them. And it seems that a lot more people are doing that right now. That's why rallies don't normally last too long. You see them get sold off and they pull back very heavily. And until we get ourselves out of that mindset and trying to just tighten supply and allowing prices to be able to climb, then we were just going to be in this type of circular motion or cyclical motion of markets in the meantime. Next, please. So, also contributing to the, I guess, the little dullness into the market condition is because in the first half we saw Philippine bond yields, which is a precursor for interest rates, stay relatively high. If not, it actually went higher during that phase. But fortunately, it seems to be tapering off now, and I'm thinking that might be the fresh catalyst to be able to see that it could generate a little bit more rally action for us. But as you well know, if interest rates relatively stay high, then that's obviously not good for the equity market. What's funny is that the BSP is cutting rates, but our yields remain high, right? And that normally doesn't happen. Normally they move together. In fact, yields normally move ahead than in the interest rate. So obviously something was keeping it there, and that kind of put a little bit of pressure on the market. Then I'm sure many of you have seen the heavy volatility into our peso, right? And primarily really because the dollar was also quite volatile. The dollar was very weak. And because of that, if you notice that the peso actually picked up a lot of strength in the early part. And then all of a sudden, if you notice the chart here on the right, you just see a very big recovery swing. So it's hard for investors to be able to peg that, especially if foreign money is coming in. And the reason is they don't know, because will currency volatility knock out part of the gains that they make? So the more volatility they see, the more adverse they become. So these contribute to people saying, okay, I won't put too much money in there, or I'm going to be extremely short term, because right now I don't know what the knowns are, because it's very volatile and there's a lot of question marks that are taking place in the market. And so altogether, that contributes right now to the sideways positioning that the market currently sits on.
All right, all right. Going back to April, so you mentioned some positive developments and as well as some negative developments. So what now? I mean, how do we proceed going forward? What's the view for the next 6 months?
Okay, that said, actually, I'm still positive naman, in general. Okay, let's go to slide 21. So I just want to say that, no, that's not the slide 21. Sorry, 15. Sorry, slide 15 pala. Yes. Sorry, nagkamali ako. There are still opportunities that are available. And one of the favorable developments recently was, signs that there are increasing likelihood of earlier and larger Fed rate cuts, okay? And if that happens, of course, there will be weaker dollar, stronger peso, which is a positive for the market. And, the BSP, which is heavily influenced by what happens in the US, no? Because of course, it's concerned about the peso. At least it will now have more room to cut rates, which it has said naman that it wants to do. And of course, gold prices could go up further. So anyway, let's talk about the Fed rate cuts. So Powell already said that he's not ruling out a July rate cut. And if you look at the CME Fed Watch tool, earlier this year kasi, di ba, 25 to 50 basis point rate cut na lang for this year. But now, the odds are tilting to 50 to 75. Okay, so yan. Some positives. Okay, then let's go to the next slide. I think if you look at the market, actually, the index parang ang pangit down 2.5. But if you look at individual stocks, really the active investors could have made money. And Juanis had mentioned that there are really weak stocks, but there are also strong issues. So an active investor would have made a lot of money during the first half. If you look at the Philippine All-Share Index, it was actually up by 0.9% in the first half. Well, of course, 0.9 is nothing great, but it's still better than down 2.5. You actually had more gainers than losers, 144 versus 117. And you can see here, this was not the whole list, but those companies at least which I could identify na may reason naman kung bakit sila umakyat. You could see here pa lang from this list, more than 20 names delivered double-digit earnings, share price appreciation, which, can be identified. Not surprising. Okay, let's go to the next slide. And I just want to highlight the reasons for these companies performing better than expected. Well, one of the things that we've always been highlighting is valuations are really very cheap. So I remember the last time we were here, the key takeaway, I don't know if you said it or si Melvin said it, but sabi, have low expectations. So in other words, investors who are buying Philippine stocks right now have low expectations. And then all of a sudden, oh, ang ganda pala ng earnings. And then the share price will go up substantially. So essentially that happened to a lot of companies in the first half. Then, of course, gold prices went up substantially. So you had a lot of gold mining stocks going up significantly, like Philex, APX, OGP. Yun nga, strong earnings growth. You had the gaming companies like Plus coming out with the strong earnings, and consumer companies turning around, showing strong recovery. Kasi nga we said consumer spending recovered because of falling inflation, which, we said it naman in advance, so we could have made money there. And then a lot of them gave surprise cash dividend declarations that were much larger than expected. So that acted as a way to unlock the value of, the cheap valuations. So, for example, among the banks, you have PNB, which first time in its history came out with huge earnings, and the share price went up in response. Yun nga, the unlocking of the value. We have Pure Gold as well coming out with surprisingly, larger than expected cash dividends, special cash dividends. And then for the REITs, you have asset injections happening and other company-specific developments. So yun. So ngayon, ipa-plug ko, dapat every week, babasahin nyo yung report ni Charles tsaka ng research team because it actually brings value. For example, you have FGen and FPH, di ba? The sale of their gas platform assets to generate 50 billion. So that's the reason for that. AP, potentially to be included to the index. Cebu Pacific benefiting from lower oil prices and, cheaper crude. And then Converge, just general recovery of broadband, Philinvest, better than expected earnings. And you can see the high dividend yield of 7%. Okay, Philinvest has a dividend yield of 7, so total return of 21. So, yun, essentially, that's why I think there are still opportunities to make money.
I think that's the most important point. No? So still a lot of opportunities despite the... Kasi pag tinignan mo lang yung index, it looks like it's like sideways, nothing's happening. We don't
Tsaka, I want to highlight one more thing. Let's go to the next slide. In terms of valuations, you can see how cheap. So this is just to put things into perspective. Like, stocks are really very cheap because you can see that the earnings yield of the PSEi right now is higher than the bond yield, the Philippine 10-year bond yield. So in other words, I think what is relevant to us as retail investors, for example, if you place your money in a 10-year bond, 6%, less 20% withholding tax, so 5 plus ganyan. But let's not even look at the PE ratio, which baka sabihin nyo, ano naman yan? Yung 10 years, whatever. Kasi diba, a lot of stocks trading below 10 times PE. But since a lot of them are now paying cash dividends, there are so many stocks right now that are giving you more than 5% dividend yield. And if you are patient enough, you don't really need the money, and you're quite confident they're not gonna lose money. Sabi natin, yes, single digit is boring. But, as long as the earnings go up, the cash dividends will either be the same or up. So, you're better off just holding on to it. And then one day, if, panapanahon naman yan, babalik din yung investors. Diba? So, may capital appreciation ka pa kaysa iniwan mo lang sa bangko. Wala. Yun lang naman. So yeah, that's why I'm still bullish.
All right, good. All right, so Juanis, we've been stuck in this sideways movement, large sideways movement for several years now, from 5.7 to like 7.6, right? Is this still normal for market bottoms? And when can we realistically break out of this range?
All right. So I think you can, if you can just see from the slide we will show now, please. Okay. So the sideways range we're talking about has actually existed back there since 2021, right? So ideally, we've just been going up and down and up and down into that very, very big particular range. And I guess the question that Charles is asking is, when are we going to break the top end of that? Right now, I'm not even looking at that first, because I'm actually looking at the smaller range first, because we got to do this one step at a time. Things have to change, I guess, in terms of the prospects of the Philippines. But it's nice to see that what April pointed out is that valuations are at a very attractive level. And I hope that tells me this is not breaking down, right? Because it's just too attractive to even stay here already. What more? Why would I look lower? So that gives me the confidence of saying that this is a bottom in the making, right? So keep your eye on that range. Now the question is, while we're in that range, what do we do? Right? So you have to be able to allot some strategy, understanding that our market's going sideways. And number one is you have to be very selective. So yes, this is a stock picker's market. You cannot just buy broadly all the stocks in the index and hope you're going to make money, because it could be flat, net. But some issues will climb and some issues may not. Some issues may even come down, and you have to be prepared for that. Next, please. How long, I guess, is really the big question, right?
How many more years?
The chart you see in front of you is a typical bullish and bearish chart, right? If you notice the bottom of that, you can see how long it takes on the bottoming out process. Now you're wondering, why does it have to take so long? Why is it that in a top, if you look at the high band there, it tops out all of a sudden, it just whips back very, very quickly. But in the bottom, it normally takes a longer time to be able to unwind that bearishness. And it's because it takes time for companies to be able to show that aggressiveness come back. Earnings have to slowly come in, and so far, what we've been seeing, it seems to be holding well anyway. So I'm really quite confident that we are making this bottom. It's just taking a little longer to be able to unfold. Normally, if a decline lasts for more than 6 months, like a downtrend would last more than 6 months or longer, then normally the bottoming out process takes very much longer. Right, so typically we've already seen around almost 4 years of that. So I'm hoping that we're kind of pricing most of that into it. But understand, remember, that's a bottom, right? So for you guys who are longer term, you should be accumulating your positions now. You don't want to wait for the market to start running up before you would do that. So strategically, look for issues to be able to pick up your favorite issues. I hope it's not the weakest one, but at least issues that are generating good income, and the bottoms are clear. You can see formations, and you can start from there and go ahead and accumulate them slowly, because this market's not about to run away from us yet anyway, right? If you look at this next slide, these 4 phases of the market, you will see a period of accumulation, then advancing, distribution, and then, of course, the next one is a decline. So we're clearly finished with the decline. We're now in that first part over there. This is normally the quiet time of a market, the period of accumulation, and that's what you should be doing today. You should just be slowly increasing your portfolio in the key strategic positions into noteworthy issues or stocks. Where do I feel I am in that chart? If you notice the orange box there, I've kind of pointed out where we are in that accumulation phase. So we're coming towards the end of it. Okay, I can't tell you if it's going to be next month, 2 months from now, or 3 months from now, but it's not going to take 4 years from now, right? We're done with most of it already, right? So now keep yourself positioned in those issues, and remember, what we will do first is we'll trade it selectively. One day you will notice, oh, it seems to be catching fire already. But until that time, you will trade things selectively so that you can take advantage of the opportunities you have today, right? But I just warn you about the broadness. You can't just, like Charles said, don't just buy an index, because that might not work out the way you want to, because there's still some structurally weak issues out there. Okay, next, please. So going back into that index, so we got to be able to look at the shorter term version, because we know the longer term is we're stuck in a big range. So what do we have in the short term? In the short term, we do have some short-term upsides, okay? And that's what we're going to try to bank on selectively. So you see the index right now, it seems to be composing itself in a small little range. It recently just bottomed out from 6,200. And I'm hoping that there's this period in the second half of the year, normally closer to August. The second part will be about somewhere between October, November. These tend to be generally advancing months rather than corrective months. September, normally, we normally see pressure there, but every once in a while you might see an aberration. Just like last year, we actually saw a strong September, right? But generally, September is usually a weaker month. And the positioning we do right now is, since we just come off a consolidation, you should start looking at your favorite issues. I would suggest that in markets like this, in a sideways market, you don't have to pick all index stocks. Here's where you can look at second liners, maybe even third, but I'd rather just stay in second at best, because third liners have this problem about liquidity where you can get stuck in a market that's not exciting. So be very careful lang about the really tiny caps. But yes, you can look at main liners and second liners with opportunities to trade. And hopefully what we can see with the index is that the potential rally back to that high band of where that index is, which is closer to about 7.5 and 7.6, and try to be able to pick off some issues from that particular band. Next. Okay. So this chart just tells you why I was talking about why the August and the potential October, November areas. This particular chart shows you that those particular areas tend to have positive advances for the net performance, and usually more often rather than not. So that could prove to be helpful in some of the timing that you guys might be able to use. And next, please. And well, I guess this is a chart that I really like to see. I think April mentioned a little bit about it earlier. If you look at the index, which is the first chart on the upper left, you're going to notice that it seems to be throttled in its ability to climb. On the right of that is the all-share index. It's actually doing a little bit better than it. So it tells you that the broader market is actually behaving better than the 30 mainline index. And if you look into subsectors, for example, on the bottom, you'll see the holdings index, you have the property index, and you have the services index. If you look at those charts look like they've bottomed already. So that tells you that there's a prospective trade windows in many issues that are dealing with that, or maybe the top one or two issues that are driving those sub indices higher. So you should already be looking for these significant movements technically so that you can take advantage of them in the short term. So we'll do this while we're in that big particular range for the meantime. And this is the opportunities that we'll see for the time being.
All right. Okay. April, I noticed a while ago when you were sharing the stocks that outperformed for the first half, they have a common theme of earnings growth, surprising earnings growth. But at the same time also, you mentioned a while ago that as a whole, the market, the index as a whole, the earnings has been unimpressive for the first half. So I guess my question is, what's the earnings prospects going forward for the rest of the year? Do we expect overall earnings to improve, or talagang mixed pa din?
I think it's going to be mixed. But okay, I think one of the things that I think will happen in the second half is yung isang positive talaga is inflation. No matter how you look at it, because rice prices have gone down, and you look at the survey results, may lag eh. Parang the Filipinos, if you look at the survey, fourth quarter, first quarter, second quarter, I think the major shift that you will notice is for the first time, their view on inflation has changed. Dati, they always say, mataas ang presyo ng bilihin. Ngayon, sinasabi pa rin nila mataas. But instead of it really worsening, they're saying, oh, now I'm only expecting prices to go up by 3%. Dati parang 5%, ganun mataas. So yan, ito, inflation. Yan. And in small part, not in small part, it's due to rice prices. As you can see, the latest number down 14, and oil. After a scare because of the 12-day, Israel-Iran war, it's now back to the $60+ per barrel range, which is good news. At least, may relief. So Filipinos feel like, oh, we have more money and then we can spend. And we did the rounds. We called consumer companies, and so far they said second quarter earnings look good. the demand is there. So my feeling is, ayan, ito 5.3% recovery ng consumer spending natin first quarter, which is kind of weak actually if you think about it. Pero kasi nung first quarter, mabagal yung trickle in ng lower rice prices, I would say. But, it's still there. The favorable impact still kicking in. So I think, yeah, the consumer companies will do well. And then select companies, maraming opportunities actually.
All right. Okay. I'll quickly transition to the US market. No? So, Sir Juanis, since the last outlook, we saw huge swings. Pag tinignan mo ngayon, parang up lang a little bit, but we basically gone through wild swings in the US market. Could you give us your thoughts on the US market today?
Okay, so you can have the U.S. there. Okay. So clearly, you're looking at one of the stronger markets that we have had around the world, and the S&P, the Nasdaq, and the Dow all have been very much into that upward trajectory. That hasn't changed. I didn't think it would make a V-shaped formation, which is clearly what it did. But I thought it would be more graduated type of recovery, but it did it very fast. And I guess the reason is because a lot of these little heated policies they've been making into the years have been lightning fast, surprising. And as much as everybody was saying it's not going to be good, it's not going to be good, the market doesn't seem to be worried. And one of the things I think that proved very healthy for markets like the US as against us is that, in the US, when the market goes down, you got all these funds waiting to be able to buy the market, and they deploy. Here, when the Philippines falls down, are you guys in a rush to buy the Philippine market? No. Okay, so I guess my sentiment. So what you're doing is you're looking at things stock specific little by little. Right there, they just do funds and they invest in indices and they just keep themselves invested. And that's a reason why the rebound ability is there. And there will be a lot more turmoil. Okay, I fail to see how having Trump as a president over there will be, a smooth sailing ship. I mean, you're going to see markets gyrate continuously as policies do change. In fact, I think you have the tariff. When's it? July 9, I think, coming up. And then, of course, there are other things that he's trying to be able to schedule in. I think the other day he just passed the BBB bill, or the Big Beautiful Bill, which the market didn't seem too worried about them passing it. But I'm thinking that the S&P 500 will find some volatility soon. I've targeted about 6,003 to 6,004 as a potential resistance for the S&P. If you noted, that's kind of the high band or where the red lines are kind of stationed. So anticipate that there might be volatility coming up soon because the index is nearing that band already. But I don't think that the advance is going to kill itself. I think it just needs to correct. So in terms of the US, I'm still quite positive for it. It's overbought now, so I just anticipate there could be a pullback into that. But if I could just talk about two more matters. Next slide, please. So let's just talk a little bit about U.S. bond yields. Now, in U.S. bond yields, there was a little bit of a hiccup rally also there, and I think it's also trying to be able to find what it's going to try to station itself at. And the reason I think that the yields are a bit worried is because a lot of the policies that Trump is doing, the tariffs and now the BBB, are inflationary. April, if you don't mind, talk a little bit about fundamentals. And my worry is that the chart itself is telling me, though, that although, yes, it was showing some worry, it seems to be tapering off. So that would be good, and that would mean that perhaps the Fed soon might be able to do what April said, which is to be able to lower interest rates, which is what Powell right now is trying to not do because he's worried about the policies Trump is gauging. But if interest rates can finally come back down, then that could be quite helpful for markets, and that could also be very much helpful for the U.S. as well. So these are potential things that can still be good for the U.S., and that's why I'm not looking at a big decline coming off the U.S. market. Second, it has a problem, the dollar. The dollar is a problem because it's been exorbitantly weak. If you look at the chart on the right, you will see that the dollar is testing its major lows right now. A major uptrend line also sits right below it. And that needs to rally now. So we're at major support for the dollar. If that were to break down, that would be telling me that the perspective on the dollar has becoming very negative, and that could be something everybody may have to account with. Now, some people were asking me the other day, why was the peso recently strong compared to the dollar? And the reason is because the dollar has been very weak and the peso has been rebounding. But the reason why there was been a rally into the dollar peso just recently is really because I think of the differential on the yield side. And if I can just explain that is, if you buy a dollar, you get a certain return or keeping your money into the dollar. The interest rate for holding that there is almost close to the same rate that you would get if you would hold the peso. As that becomes almost the same, people are going to ask, which currency would I rather hold to get the same return? Will I sit in the peso or will I sit in the dollar? And I think many of you will probably make the decision to stay in a dollar to get the same kind of yield. And that's the reason why I think there was also a counter movement in the peso recently. So you also have to be watchful of that. But I think if that dollar were to break down, that would turn things around, and you might be able to see the peso firm up. But I think we're probably going to hold here for now, right? So in terms of the dollar, so there might be a counter move, and your peso might have to be able to move sideways in a particular set band. But these are the things that seem to be holding the U.S. in place. So I'm not looking at any catastrophic issues just yet for the U.S.
April, you shared some concerns about the U.S. market in the past, no? So do you still hold those concerns, and could you,
Yes.
I guess, highlight it again?
They're still there. Can we go to the next slide after this? Anyway, kasi one of the issues, di ba, na sinasabi natin, I think earlier this week, I think Thursday night, they came out with the strong jobs number, as they would say. But really, I mean, if you look at it, the nerds, like me, pag tinignan mo yung detalye, a lot of the jobs that were added were actually government jobs. And then the US kasi has this birth-death model that will automatically add 80 to 100,000 jobs. Kasi there's this other survey that comes out, which is the ADP. So, nagtataka yung tao. What's popular among investors and the Fed is the non-farm payrolls. And the non-farm payrolls came out with 147,000, which is actually higher than expected. And of course, above the 110, I think last month, which was, again, revised up, which is unusual because in the past 2 to 3 years, downward revision lagi. Tapos, ano ba, is this a sign that things aren't as bad and they're actually recovering? No. Kasi the ADP data is actually down. The household survey is also down. And then there's this economist that I follow, si Anna Wong of Bloomberg. And she's saying kasi, if you look at the private sector, it's really down. But you can, what do you call this? Reconcile it by adding the 70,000 government jobs plus the 80 to 100,000 birth-death model jobs that they automatically add no matter what. And then you come out with 147. So parang it doesn't really change anything. And then let's go to the next slide. I think what's more important is the other indicators. Kasi sa recession naman, hindi naman lahat yan magne-negative eh. Diba? You have to look at everything. And if there are more indicators turning negative than positive, then it means that maybe you're on your way there. So the LEI, leading economic indicator, is actually triggering a recession sign again. So first is the consumer pessimism. If you look at the all types of surveys measuring consumer sentiment, it's really negative. And then there were weak new orders in manufacturing. Again, we talked about the uncertainty of the tariffs, etc. So if you were a manufacturer, hindi ka aggressive eh. Kasi hindi mo alam, baka palit na naman ng policy, di ba? So you wanted to be solid first, or you want to know what's going on before you actually commit. And then rising initial claims for unemployment insurance, increasing. And decline in housing permit. So, yeah, another thing that I guess people were wondering, We were kind of worried about the high interest rates before, but why didn't the housing sector collapse? Kasi in the US, di ba, may 30-year bond, 30-year mortgage sila, and you could actually lock in long term. But now, a lot of those borrowings, slowly, nag-i-increase na sila, nagre-refi, and they're being affected. And a lot of those projects that were initiated during the start of the pandemic are finished and are coming online. So ngayon, medyo nare-reflect na sa housing market in the US, yung negative. And then next slide, let's look at that. More signs of consumers showing stress, unemployment creeping up. Baka controversial yun. They might say, during the last Thursday, the job numbers showed a decline. But the reason why it fell is because the labor force participation went down. The labor pool actually fell. So if you do the numbers, lalabas parang bumaba, but it's not true. It went down for the wrong reason. And then yun nga, default rates are shooting up. So talagang hirap yung mga consumers.
All right. April, I'll stay with you. We've been saying that the Philippines has been cheap for quite some time. What could be a realistic catalyst that could finally lead to that re-rating that we're all waiting for?
Okay, that's hard.
Is
No,
it earnings? Could earnings be?
Yeah, I think okay, let's just put things into perspective. Okay, GDP growth recovered in the first quarter, but it was still below expected and below 6%. So I think if GDP growth returns to the 6+%, then that will allow earnings to grow a lot faster. And that should be a catalyst. And I think the lower interest rates would also help a lot. Yeah.
Sir Juanis, how do we compare to markets regionally? Could you share that? And maybe what could be like the first signal that we are finally turning around the Philippines?
Okay, so with regards to the Philippines, comparing with others, so we're kind of in the middle. So I think this chart will explain that. And if you notice, the centerpiece just happens to be the PSEi index, and we're just down slightly. This is a year-to-date chart, so you can compare with other markets. The strongest has been South Korea that you see there in the ultimate left. It's done incredibly well, followed by the Hang Seng or Hong Kong market. And on the opposite side, you have Thailand and Indonesia. So we're quite smack in the center. So we're not the strongest, but clearly we're not the weakest. So we're just smack in the center, and that means that in order for us to be able to attract attention, you got to do something, right? Something more material has to come in, and here we are in a sideways market. So something else has to happen other than the everyday notions that we look at. Next, please. So when you see what the Philippines looks like, you'll see on the upper middle chart, you will see that's our index. And you can see what the others look like very clearly. The strong ones are very strong, and the weak ones are very weak. And so in markets like this, you have to situate yourself where money flow goes, right? So if you happen to be one of those ones in the left side, you're lucky that you're positioned inside there. If you're in the center, what do? So you probably have to be able to narrow down your expectation, because this is not going to do what you have on the left side. There's something structurally keeping us from that type of market. So again, you have to be able to limit your expectations, and then you trade within that expectation. So for example, if what you're seeing there, and we can punch out to this, and we're going to go to our next resistance, you might be able to have opportunities for rallies, but don't anticipate your rallies will go up 10, 20, 30%. Okay? So that's not normal. So you'll probably see rallies within the range of 3 to 8%, and maybe those are probably the band that you probably want to have a look at. Next, please. So I guess what do we want to see to trigger the advance? I think the first one you're seeing there, which is the first resistance, has to break. And that area between 6,590 and 6,000 is our first threshold. If our index can break that, then you'll probably see a lot more issues start to recover. Right? That'll be a bit more fluid now for you to trade, because you'll probably have a lot more issues that you can buy. if you're looking at where we are today, that's still quite dispersed into a market. It might be quite challenging for you to be able to get see that, and that's why we say you have to you really have to take a stock selective mindset to be able to do that. Could we go to the next slide so you can look at it? So this particular slide just shows you this, okay? So I looked at the index stocks first just so you can get a sense of it. Those issues that are colored green, these are kind of issues that are trading above most of their moving averages. So that means they're kind of in a rally trend, or medyo pataas sila. The ones in the middle that are in color blue, these are the ones that are going up and down inside the set band. They're trading within moving averages. And harder to get big movements out of these particular ones that you get here. And obviously the ones in red are the ones that are having a difficult time showing short-term declines. And so what do we need to see? Aside from that index breaking, what you need to see in this chart is you need to see more of those reds become blues and more of those blues become greens, right? And until you see that, then the problem with the broad market, it will stay relatively inert. So you really have to be very much a stock picker. I'd say your choices will be somewhere in the middle or even to the green right now. If you guys are going to be buying those in the red, you better have a longer term mindset because it might take a little longer time to get what you want. But of course, your argument might say, maybe if I'm buying those reds, the potential upsides can be big. That's true. But remember, when you make time over money, you can say, hey, I made 10%, but 10% in 1 year is different than 10% in 2 or 3 years. Okay, so understand the difference. So try to position yourself a little bit where the action's almost there getting better rather than, bottom fishing in something that might take still a while before they can recover. And next, please. So, and this is, I guess, the problem we continue to have is that foreign flows continue to be negative. And so this particular problem has been existing for quite some time. So the orange bar there means that these are net foreign selling taking place into our market, and that's shown you every year so far. And we haven't seen that pull back because as of 2025, we're still negative. So we need participation to improve. We need a broader line of issues to be shown. And at least in the beginning, we need to break over that 6,600 range to trigger a much prospective market for us.
All right, very clear. Okay, my last question for this segment before we go to the specific stocks. No. So what's your, for the two of you, what's your PSEi target by the end of the year, and what's the general recommended investment or trading strategy for the rest of the year? April, you want to go
Me
first?
first. Okay. Okay, so my target, kasi remember during the start of the year, we came out with a scenario analysis, and then I said I pegged my target at 8,100 because I expected a re-rating of the market. Kasi yun nga, baka FDIs dumating, so in a way, it kind of excites you. Like if you go out there and tell investors, dumarating na yung mga FDI. So we know that this GDP growth of north of 6%, 6 to 7, is more sustainable the next few years because we're seeing more investments come in. Unfortunately, we did not see that. So I feel like we'll see more of the same. So we're cutting our target from 8,100 to 8,100. So if you've been reading my Calling the Shots report, I've been saying it's a buy on dip, sell on strength type of market. And most likely, we will see the same. Yun na nga, same as Juanis is saying, 7.6. So medyo nandun. Medyo pareho kami. And then still active investing, better, over passive. So be selective. Yun na nga, since I talked about lower inflation to continue and interest rates falling and potentially a stronger peso, these are the sectors which I feel will benefit the most. You have the consumer companies and the, REITs, dividend, smaller banks, because the bigger banks already went ahead, but now it will be the smaller banks because they'll enjoy higher margins, high dividend paying stocks, Airlines, because oil prices are going down, the peso is appreciating. It will benefit airlines the most. And for property companies, but on property companies, I'm not that bullish because a while ago I showed you that they're facing threats. It's more like they really are so cheap and they are viewed to be beneficiaries of falling interest rates. So if you look how they performed in the past during times where interest rates went down, nagrarally talaga sila. The problem is, binibentahan din all the way back down. So that's my view on property. Sige, baka umakyat sila, they will take advantage of it. But I looked at the earnings kasi of the property companies, and what is worrying is the weak take-up sales.
Juanis? Yeah, I'm sorry.
All right. Well, yes, I also pegged my maximum target at about 7.5, 7.6 because, as I said, since being in a range, I'm not going to try to forecast a breakout so far away from it. So I will peg my year-end target there. But when I say year-end target, I don't mean it'll hit that target at the end of the year. I'm saying maybe somewhere within the year we could potentially go there. But I'm not looking of it to go out of that range just yet until I can see something clearly better into it. So that would be it. But the first band of resistance is that 6,590, 6,000 would be the area that has to beat first before we can even look higher. And and also you have to be able to understand that some of the issues that are to us looking more attractive are the ones that are bottoming out already, are making bottom-like formations because at least it's telling you that at least it's anchoring itself and that it's not falling down. And then you need that first burst of a rally to take place. I really hope the properties is that scenario. But of course, the fundamentals are clearly against it. Now, I hope what April said doesn't happen. The tendency for them is to fall back all the way down because if that happens, that's even going to delay our consolidation even longer if your property sector continues to be able to submit to that type of exorbitant selling. So I'm hoping we're looking at higher lows for the property because if not, we're not going to go up to the 7.6, right? So that's quite critical. So traders really have to be watchful that you're going to see channels that will go up. So that means you're going to be going up like this, snaking up rather than boom, 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 going up. That's not the environment we're in. So do not chase prices. Okay, you wait for prices to come back down to support and you buy them off the rebounds. Okay, please be careful about extraordinary advances. Many times they're not going to be doable to maintain that for a great length of time. And I think some of you have learned what gravity can feel like in certain issues, right? All right, so of course, oversold conditions is also what you want to see in the issues that you are tracking. If you see oversold conditions and they seem to be bottoming out, I mean, those are the perfect times for you guys to be able to trade. So roughly, those will be the two kind of scenarios we're looking for eventually to take you back to that high side of the index.
All right, thank you, thank you.